are named and numbered in the same way as the International Financial Reporting Standards. On the basis of the foregoing discussion, we can say that accounting standards are the guide, dictator, service provider and harmonizer in the field of accounting process. Accounting standards, they have easy comparability. So they have made it simplified, the comparison of different financial statements. Hello everyone, I am Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Grade College, Temple of Excellence, MYSURU. I welcome you all to this session. In this session 2 on recent developments in accounting and accounting standards, we will be having a discussion on what are the Indian accounting standards. Now let us see what this session holds for us. So Indian Accounting Standard, abbreviated as INDAS, is the accounting standard adopted by companies in India, and it is issued under the supervision of the Accounting Standards Board, which was constituted as a body in the year 1977. Now this Indian accounting standards, it came into existence in the year 1977 because of the ASB, that is the Accounting Standards Board, which was constituted in 1977, and it is a committee which is set up under the Institute of Chartered Accountants of India. So the Institute of Chartered Accountants of India, it has set up a committee which consists of representatives from the government department, academicians, other professional bodies, representatives from ASSOCHAM, C2, CII, FICCI, and it is an independent body formed under the Act of the Parliament. So this Accounting Standards Board, so it consists of representatives from various walks of life, like the government department, we have the academicians, and also we have the various institutes which are there, like the ASSOCHAM and the CII, FICCI, Federation of the International Chamber of Commerce, then ICAI. So it is a separate organization formed under the Act of the Parliament. Then they are named and numbered in the same way as the International Financial Reporting Standards. So just like the IFRS, we have the Indian Accounting Standards. So the National Financial Reporting Authority recommended these standards to the Ministry of Corporate Affairs, and the ministry has to spell out the accounting standards applicable for companies in India. So as on date, MCA has notified 40 IND as is omitted by the companies. So as on this date, they have 40 Indian accounting standards which had to be followed by the corporate organization all over India. Now, the next one is, it shall be applied to companies of the financial year 15-16 voluntarily and from 2016-17 on a mandatory basis. Now these accounting standards, when in the first year of its application, it was voluntary, then they made it mandatory. So based on the international consensus, the regulators will separately notify the date of implementation for the banks, insurance companies, and standards for computation of tax has been notified. So based on these accounting standards, they have just agreed to just tell what is the date of implementation for banks, insurance companies, etc. And every listed company has to follow the Indian accounting standards. So unlisted company with a net worth greater than or equal to 250 crores but less than 500 crores, so they have to comply with the Indian accounting standards. So the net worth will be checked for the previous 4 financial years. Now if you have any doubt relating to how to calculate the net worth, so for the past 4 years, whatever the transactions of the company, based on that we'll be calculating the net worth of the company. Then, so we have the list of Indian accounting standards here. So 101, it refers to the first time adoption of the IND IS. So when you are supposed to adopt the Indian accounting standards, then 102 is for the share based payment, Third one is, so share-based payments relate to, suppose the company does not want to just distribute the profits in the form of cash. Then if it wants to distribute profits in the form of shares, then we call it as a share-based payment. Then next, INDAS 103, business combination. So what is the combination of business you are having? Then next one is the insurance contracts. It relates to 104. 105 relates to non-current assets held for sale and discontinued operations. So that relates to 105. 106 is exploration for and evaluation of mineral resources. So if there is any organization which is engaged in mineral resources, then what is the standard relating to evaluation of mineral resources? So those provisions we can find it in 106. Then the next one is in 107 accounting standards. So we have the first time adoption of Ind AS. Then in 108 we have the operating segments. Then in 109 we have the financial instruments, whatever can be used. Then 110 we have the consolidated financial statements. 111 we have the joint arrangements. 112 disclosure of interest in other entities. So these are the various accounting standards, the number and the whatever is the name of the Indian accounting standard. Then in 113 we have the fair value measurement. It may be of goodwill or it may be of shares, etc. Then we have the regulatory deferral accounts. Then in 115 we have revenue from contracts with customers. Then in 116 it is related to all the lease contracts. And in 1 we have presentation of financial statements. So what is the mode of presentation of the financial statement? That will be mentioned here, whether it is the horizontal way or whether it is a vertical way. So most of you must be aware that now we don't follow the horizontal method of calculating the financial statement. So it is all in the vertical form. Then we have the inventories. So all the accounting standards related to inventories can be found in accounting standard 2. Then 7, statement of cash flows. So along with the financial statement, every company has to issue the statement of cash flows to see how the flow of cash in the company. Then accounting policies, changes in accounting estimates and errors. So what are the accounting policies which are to be followed, and what are the changes in accounting estimates and errors in accounting? So for that it is accounting standard 8. Then in 10 we have events occurring after a reporting period. So once you have just reported the books of accounts, then suppose there are transactions, then what do you do with them? So for that you have to refer the accounting standard 10. Then next, in accounting standard 11, we have construction contracts omitted by the company's amendment rules. So construction contracts will be relating. So that will be 11. Then in 12, we have income taxes. So what is the calculation of income tax, when you have to pay it, and what are the various provisions under which you can plan for the income tax, etc. Then 16 relates to property, plant and equipment of the company. 19 we have employee benefits. So what are the various employee benefits the company has to extend? So whether it is the provident fund, whether it is the gratuity, or whether it is the LTC, the leave travel concession or leave encashment. So all these are various forms of employee benefits which will be extended by the companies. So it will be made a mention in accounting standard 19. So in 20 we have accounting for government grants and disclosure of government assistance. So what do you do? Suppose you are getting a government grant for your company. Then how do you have to maintain the accounts relating to that grant? That will be mentioned here. Then in 21, effects of changes in foreign exchange rates. Suppose the company is engaged in foreign trade. Then what are the various provisions for fluctuations in the foreign exchange rate? Then next one will be the borrowing cost. So that means what is the cost of borrowing the loans. Then in 23 we have again borrowing cost. In 24 we have related party disclosures. 27 separate financial statements. 28 investments in associates and joint ventures. 29 financial reporting in hyperinflationary economic. Financial instruments presentation. Earnings per share. Interim financial reporting. Impairment of assets. So, and then in 38 we have the provisions, contingent liabilities and contingent assets, intangible assets, investment property and agriculture related accounting standards. So these are the list of Indian accounting standards which we have found here. Then the next one is, let us look into the nature of the accounting standards. So on the basis of the foregoing discussion, we can say that accounting standards are the guide, dictator, service provider and harmonizer in the field of accounting process. So how to maintain the accounts and what are the various provisions of accounting, all this we can be having as a guide in the accounting standards. So first one is, it serves as a guide to the accountants. Okay, accounting standards serve as a guide to the accounting process. They provide the basis on which accounts are prepared. For example, they provide the method of valuation of inventories. So, with the help of the accounting standards, we will be able to know how to value the inventory. What is the meaning of inventory? It is nothing but the stock valuation. Then, next one, serve as service provider. Accounting standards comprise the scope of accounting by defining certain terms, presenting the accounting issues, specifying standards, explaining numerous disclosures and implementation date. So, they are descriptive in nature and serve as service providers. So, in this, we can consider the accounting standard as a service provider. So, what kind of service they are providing? They are by defining certain terms, presenting the accounting issues. So, what are the accounting issues we have to take up? And then what are the standards we have to specify, and explaining numerous disclosures and implementation date. So, what are these things which you have to disclose in accounting and when you have to implement this? So, all this will be mentioned in the accounting standards. Then, next one is, it acts as a dictator. Accounting standard acts as a dictator in the field of accounting. So, like a dictator, in some areas, accountants have no choice of their own but to opt for practices other than those stated in the accounting standards. For example, the cash flow statement should be prepared in the format prescribed by the accounting standards. So, it acts like a dictator. Why? Because people have to follow a uniform way of presentation of accounts. So, they have given the format and based on the format only, all the accounting statements have to be prepared. So, that is why we say that accounting standards act as a dictator. Then, acts as a harmonizer. They are not biased and bring uniformity in accounting methods. They remove the effect of diverse accounting practices and policies. On many occasions, the accounting standards develop and provide solutions to specific accounting issues. It is that clear that whenever there is any conflict on accounting issues, it acts as a harmonizer and facilitates solutions for accountants. So, whenever the accountants are faced with any of those issues for which they don't find any answers, then these accounting standards, they offer such solutions for any of the problems faced by the accountants. Then, next, why is it important to have accounting standards? So, they play a very efficient role in the whole accounting system. And what are the important roles? We'll just see here. So, it brings uniformity in accounting system. So, with the help of the accounting system, we will be able to bring uniformity in the system. they are the one that helps in bringing uniformity in the whole accounting. It is one important advantage of accounting standard. So when the entire business community have to follow the format prescribed by the Accounting Standards Board. So as a result of which, so whenever any company is presenting any of the financial statement, it will be in the format prescribed by the Accounting Standard Board, and as such we can say that there is uniformity in the presentation of financial statements because of the Accounting Standards Board. So all the companies have to maintain in the same format and in the same procedure whatever they have mentioned, as a result of which we can see that it is there is uniformity in accounting. Okay, let us see the next importance of accounting standards. So accounting standards set the same rules and regulations for the treatment of accounting transactions. So the accounting transactions whatever are there, so they will be setting the rules for all the accounting transactions. It means that all companies record the transactions in the same manner. For example, Accounting Standard 6, it gives rules relating to depreciation. Now, what is the method of depreciation to be followed by the companies? Whether it is the straight line method or whether it is the WDV method. Now, what is this WDV method? So, written down value method. So, we have to just see what kind of accounting policy you have to follow, and you will be guided by the Accounting Standard 6. So, this way it brings uniformity in the whole accounting procedure. So, we will be able to know whether the business organization, what kind of accounting policy it has adopted with relating to depreciation. Then, next one, easy comparability of financial statements. Now, these accounting standards, they have easy comparability. So, they have made it simplified, the comparison of different financial statements. So, the financial statement of two companies can be easily compared. If they are following different accounting system and format, comparison becomes quite difficult. Now, because of the accounting standards, we have seen that almost all the companies follow the same format and procedure for maintaining the books of accounts. And when they are following the uniform method, the comparison from one company to another makes it very, very easy. But if they are following a different format and a different procedure, then comparison would have been difficult. So, if one company follows LIFO method of stock accounting while others follow FIFO method, your comparison becomes different as two are following different methods. So, accounting standard helps in overcoming this problem. So, there is this LIFO and FIFO. What is the meaning of LIFO? Last in, first out. Then we have the FIFO, that is the first in, first out. So, which method to adopt? So, it will be told in this accounting standard rules. Then, next, it assists auditors. So, accounting standards helps the auditors in performing their duties. So, whatever duties they have to perform, it will help them. It simplifies their tasks and makes it easy for them to perform their roles. They have established different standards, rules and regulations to be followed by companies in their accounting system. So, with the help of this accounting standards, you are assisting the auditors because auditing will be easier for them because of the uniformity in maintenance of the books of accounts. Then, these rules and regulations are mandatory to be followed by every company. It governs the whole manner of preparing and presenting financial standards. So, if auditor assures that company has followed accounting standards, he can easily verify the financial standards are fair and true. So, when everybody is having uniformity in maintenance of books of accounts, we can ensure that the financial statements are fair and true. Makes accounting informative, easy and simple. Simplifying the whole accounting information is important advantage of the accounting standards. So because of the accounting standards, we have this accounting made very, very easy. Then it provides the standard rules for each and every accounting transaction. It removes all complexities in the accounting process. Standard and uniform processes followed. It helps the users in easy understanding and avoids misleads from it. So this accounting standards they have simplified all the process of accounting. So what is the best method of following the accounting procedures? What is the formats? Everything has been mentioned. So you need not bother. For example, it clearly shows the real rules regarding to the flow of cash under three main heads. So three heads are operating activities, investing activities, and the financial activities. Now, accounting standards have prescribed the format for the cash flow. So they have just separated into three heads, that is investing, financing, and the operating activities. So based on these three heads, you will be just bifurcating the various cash flows into the organization. Then next, avoids frauds and manipulations. So accounting standards plays an efficient role in preventing frauds in the system. The frauds and any accounting data manipulation may adversely affect the organization. So whatever fraud is there, it may adversely affect the organization, and it can be avoided because of the accounting standards. It establishes different rules and principles, and they govern the whole accounting procedure. These principles are not optional to be followed, but mandatory to be followed. So whatever the principles they are prescribed by the accounting standard board, so it has to be compulsorily followed by all the corporate organizations. Then it becomes almost impossible to misrepresent and manipulate any financial data on part of the management. Committing any fraud also becomes harder for them. Provides reliability to the financial statements, as they are the important source for acquiring information relating to the companies. So investors, stakeholders depend on these statements for getting information, and they take important decisions based on this data only. So because of the strict accounting standards, we will be able to just see that there is no misrepresentation of any financial data. Now, the financial data becomes very, very important for the organization, because all the stakeholders relating to the organization, they rely entirely on this kind of a data. So based on the data, whatever is being presented, they will be taking important decisions, and as such it should not be misrepresented, and this cannot be misrepresented because of the accounting standards. So it is thus very important that these statements are true and fair. It fully governs these financial statements. It is ensured by accounting standards that these statements are real and trustworthy. So accounting statements are real and trustworthy. Then measures management performance. So this, with the help of the accounting standards, we can make it easy for accountability of the management. So how answerable they are for the various transactions. So it makes it easy to measure the performance of the management team and provide any suggestions. It helps in analyzing managing ability and maintaining solvency of the firm, increasing the company's profits, and various other important roles. So it directs the management to adopt a particular accounting policy. The same policy should be followed constantly without any confusion. So it is providing suggestions. So it will help in measuring the performance of the management, and also how they can improve their performance by providing the suggestions. It helps in analyzing management ability in and maintaining solvency of the firm. What do we mean by solvency? So to see that the firm is in a working condition, that is, so there should be ample inflow and outflow of cash, and they should be a very running company which is very vibrant in all the operations. So it directs the management to adopt a proper accounting policy. So with this, we come to the end of this session. Hope you have all followed it. Thank you.